Welcome to the Lever Trades podcast, where we take a deep dive into both foundation and advanced educational trading concepts. This video is not intended to provide investment advice. All content and opinions shared are for informational and educational purposes only. Trade at your own risk. Hey there, and welcome to a deep dive into multiple time frame alignment.
Yeah,
You're looking to bring your A game to the trading world, and let me tell you,
absolutely.
this technique is like having a secret weapon in your back pocket.
You could say that. Instead of feeling overwhelmed by market noise, imagine being able to decode the market's language across different time frames, almost like a
Wow.
universal translator for traders.
Okay, that's a cool way to put it.
Sure.
Now, you sent over some great material on MTA. So before we get into the nitty-gritty, can you walk us through the basics? Like when we say time frames in trading, what exactly are we talking about?
Absolutely. Think of time frames as different zoom levels on a map of the market. You've got your higher time frames, like looking at the whole country. That's your daily or weekly charts showing the big long-term trends. Then we zoom in closer to the state or regional level with intermediate time frames, your 4-hour or hourly charts. And finally, we've got our street level view with the lower time frames, those 15-minute or 5-minute charts where you see all the individual trades happening.
Okay, I'm already digging the map analogy.
Yeah.
So instead of just staring at one time frame, like just our street corner, MTA is about understanding how all those zoom levels connect.
Exactly. It's about finding consistency across those time frames. Imagine you're a detective trying to solve a case. You wouldn't just look at one clue in isolation. You'd look for patterns, connections, and corroborating evidence from different sources. MTA is like being a market detective, making sure the clues from the daily chart line up with what you see on the hourly and 15-minute charts.
Okay, see, now you've got me feeling like Sherlock Holmes of the stock market. But before we get to our magnifying glasses, let's talk about why this matters. What are the real benefits of using MTA in trading?
Well, think about it this way. Wouldn't you feel more confident making a trade if you knew the market was giving you the same signals, whether you were zoomed in on the 5-minute chart or zoomed out on the daily chart? That's what MTA helps you do. It increases your accuracy by filtering out those head fake moves that can trip up traders who only focus on one time frame.
It's like you're getting confirmation from multiple sources, not just relying on one piece of information.
Right.
That makes a lot of sense.
And with increased accuracy comes better risk management. When you understand the overall trend from the higher time frame, you're less likely to get caught on the wrong side of a trade. It's like knowing which way the river is flowing before you jump in for a swim.
No, I like that.
Yeah.
So it's not just about knowing when to enter a trade, but also where to set your stop loss, right? Like,
Agree.
okay, if the market goes against me beyond this point, I'm getting out because the higher time frames are telling a different story.
Exactly. And even beyond those practical benefits, I think MTA gives traders a much richer understanding of how markets actually work. You begin to see the interconnectedness of different time frames and how they all contribute to the overall market narrative.
So it's not just about making more money, although I'm sure our listeners wouldn't mind that. It's about becoming a more knowledgeable and well-rounded trader.
Yes.
It's about seeing the matrix, right? Or maybe that's just me getting carried away with the analogies again.
But there's nothing wrong with getting a little creative. But you're right, it's about deepening your market understanding.
Okay, so we've laid the groundwork for MTA. We know what it is, and we know why it matters. Now, let's get down to brass tacks. How do we actually use this technique in the real world? You know me, I love a good example.
I thought you might.
Yeah.
You mentioned some interesting points about the Euro-USD currency pair in the material you sent over. Let's use that as our case study.
Okay.
Imagine we're looking to make a trade on Euro-USD, and we want to use MTA to confirm our decision.
Perfect. So we're opening up our trading platform, and we've got our charts ready to go. Where do we start?
We always start with the bigger picture, the higher time frame.
Okay.
Let's say, in this case, we pull up the daily chart for Euro-USD BIC.
Okay.
This gives us a bird's eye view of the trend over the past several weeks and months.
Okay.
What are we seeing on that daily chart?
All right, so I'm looking at the daily Euro-USD chart, and I'm seeing a pretty clear uptrend.
Okay.
Higher highs, higher lows, textbook bullish behavior. Looks like the euro's been gaining ground against the US dollar.
Excellent observation. And that's our first clue. The daily chart, our higher time frame, is giving us a bullish signal. But remember, we don't just jump in based on one time frame.
Right. We've got to see if this bullish story checks out on our other zoom levels.
Right.
So where do we zoom in next? What's our next step in this MTA detective work? So we've got our wide-angle lens view, and things are looking bullish on the daily chart.
Right.
What do we do next? Do we grab our magnifying glass and jump straight to that street-level view on the 15-minute chart.
Not so fast. Remember, we're looking for consistency across time frames.
Yeah.
We want to make sure the market is telling us the same story at different zoom levels. So before we go to that street level detail, let's zoom in one step at a time. We'll move from the daily chart to an intermediate time frame, like the 4-hour chart.
Oh, okay. Makes sense. We don't want to miss any important clues along the way. So let's pull up that 4-hour chart for USDD. What are we looking for here?
We want to see if the bullish trend we observed on the daily chart is also playing out on the 4-hour chart. Are we still seeing higher highs and higher lows, or is there something different happening on this time frame?
All right, I've got the 4-hour chart up, and it looks like the USD pair has pulled back a bit recently. Now, for our listeners who are new to this, a pullback is basically a temporary dip in an uptrend, kind of like taking a breather before continuing the climb.
That's a great way to put it. And you know what they say, sometimes those pullbacks offer great opportunities to jump into a trend. It's like getting a discount on a stock that's headed higher.
Ooh, a discount. I like the sound of that. But how do we know if this pullback is just a breather or if the trend is actually reversing?
That's where our detective skills come in handy. We need to look for more clues. One thing we look for in these situations is something called a support level. Think of a support level like a safety net for the price. It's a price level where buyers have historically stepped in and pushed the price back up.
Okay, so like a floor that the price is bouncing off of.
Exactly. And what's interesting is that this recent pullback on the 4-hour Euro-USD chart has brought the price down to a previous support level. It's like the market is testing that floor to see if it still holds.
Ooh, this is getting good. It's like we're watching a game of market tennis. But wait, there's more, isn't there? I seen another interesting formation on this 4-hour chart right around that support level. It's called a bullish pin bar, if I'm remembering my chart patterns correctly.
You are, and that, my friend, is a very interesting development. A bullish pin bar is a type of candlestick pattern that often signals a potential reversal to the upside. It's like the market is saying, okay, I've dipped my toes in the water, but I'm ready to head back up now.
So we've got our bullish daily trend. We've got a pullback to a support level on the 4-hour chart, and we've got a bullish pin bar pattern forming right at that support level. This is starting to feel like a real Sherlock Holmes moment. We're gathering clues from different time frames, and they're all pointing in the same bullish direction. But before we get ahead of ourselves, we've got one more time frame to check, right? That street level view.
Absolutely. We've seen the big picture, and we've zoomed in on the regional view. Now it's time to put on our magnifying glasses and get up close and personal with the 15-minute chart.
Okay, let's do it. We're moving from the map to the ground game. What are we hoping to see on that 15-minute chart to confirm our suspicions about a potential buy trade on Euro-USD? So we're like really getting into it now. Bullish daily chart, we got that pullback to support on the 4-hour chart, and that bullish pin bar. It's making me excited. What's the 15-minute chart saying?
Well, the 15-minute chart is really delivering. We're seeing a real breakout above that resistance level we were watching.
Okay, so for those tuning in who maybe haven't heard about resistance levels before, can you quickly break that down?
Sure. Think of it like a ceiling, right? The price keeps hitting it but can't seem to get through.
Right.
But here's the thing. This breakout, it's happening with a surge in volume.
Okay, now why is that volume part so important? I got to know.
Imagine like a door and there's a crowd trying to push through it.
Okay.
The more people pushing, the more likely that door is going to burst open.
Right, got it.
Same idea with volume in trading. A bigger surge during this breakout, well, that tells us something. It means there's real conviction behind this move. It's not just a few traders messing around.
So we're seeing that bullish daily trend, the 4-hour chart with that pullback, the pin bar formation, and now on top of it all, the 15-minute chart is showing a breakout with serious volume. It's like all signs point to buy EURUSD.
I mean, it definitely feels that way. And this is exactly what makes multiple time frame alignment so powerful. When you see all these time frames lining up, all telling the same story, you get this confidence you just wouldn't have if you were only looking at one chart.
It's like everything's clicking, like solving a puzzle.
Exactly.
It's not about, predicting the future or anything. It's more like we're reading the market's story, but we're reading it as it unfolds across all these different time frames.
That's a great way to put it. And honestly, the more you work with MTA, the more you'll start to pick up on those patterns, those little hints the market gives. It becomes almost second nature, like you're reading the market's mind or something.
That's amazing. Now, before we wrap things up, any last bits of wisdom for our listeners who are ready to try this MTA thing out for themselves?
Don't try to do too much too fast. You don't have to become a master overnight. Maybe start by picking one or two time frames, get comfortable with those, learn how to spot those trends, those support and resistance levels. Then as you get better, you can slowly start adding more time frames.
And don't be scared to experiment. Every trader is different. Find what works best for you and how you trade.
Absolutely. Trading is all about constantly learning and exploring.
Couldn't have said it better myself. Well, this deep dive on multiple time frame alignment has been incredible. Thank you so much for joining us and sharing all these amazing insights. I know I learned a ton.
Glad to hear it. Always enjoy helping traders up their game.
And to everyone listening, thank you for diving deep with us today. Hopefully you've gotten some solid knowledge that you can take and use in your own trading. Remember, knowledge is power, especially in the markets. So keep learning, keep those charts open. And until next time, happy trading.